To our first corporate conversation of the morning, and the company in question is Paras Defence. Now, Paras is looking at a QIP. They're raising some money, almost 135 crore rupees via this QIP. To talk about the business outlook, the details, and why they're raising the money, we have Amit Mahajan, Director of Technical and R&D at Paras Defence, joining in. Amit, good to have you on. So, yeah, first up, why do you need this 135 crores? What's the plan, and where will you put it to work?
Good morning, everyone, and it's always a pleasure to be on the show. This QIP money has been raised for the fact that we're looking at good opportunities coming our way. These will be utilized for working capital requirements for the growth that we are envisaging. This year onwards, you will see a good amount of healthy growth that the company is going to witness, and this QIP money will be deployed for the working capital of this growth of the company.
When you say healthy growth, is it within your guided band? I think earlier you've told us that at a top line level, you'll do probably 20 to 30%. I mean, can you just revisit all the numbers? Top line growth, order book growth. What are your targets now that we're in the second half of the year?
So let me tell you that I am in a silent period, so I can restrict myself with the absolute numbers. But I can tell you the growth is going to be better than what we guided for.
Okay, and you had guided for 20 to 30% growth for the next couple of years. So you're on track and you could do better than that. Is that correct?
Yes.
All right. Give us a few more details then. Your associate company, Contra Paras, it won an order from L&T. So fill us in with a few details on this, the execution timelines, what kind of profitability will it, enjoy? And also, since an associate, how do you account for it? What is the listed company stake in this associate company?
So if you see, we've made two intimations to the stock exchanges. One is the receipt of order by L&T to our associate company. And then there was a subsequent intimation where the associate company has given almost 95% of the order to the listed entity, that is Paras Defence. So you can imagine that Paras Defence will be doing a substantial amount of work in this particular order. Paras Defence is expected to deliver EOIR, that is Electro-Optics Infrared System, which will be used in CIWS, that is Close-in Weapon System project of L&T. Here, this particular system is 1:1, technology from Controp, Israel. And this particular technology will be manufactured by Paras with a commitment of more than 50% indigenous content. This particular order we are expected to deliver in the next 47 months. And the profitability, like I'm telling you, I would refrain from giving you absolute figures, but it will be in line with what our defense electronics or slightly better than that.
But it's 293 crores. That's the total value of the order, right? Over this period of 47 months.
Yes. To Paras Defence, it is 293. From L&T to our associate company, it is 305.
Okay, 305. That's why you said, a little over 90% is coming to you. Just curious, how much stake do you hold in this associate company, and why this additional layer? If Paras is going to be executing over 90% of the work, why don't you bid directly, and why is this middle layer of this associate company?
So what happens is these are very, very critical technologies which we need to get into the country. The technology holder, which is Controp, which is one of the world's #1 company or leading company, I would say, they would want to retain their IP and the control over IP. Any company would do something like this. They hold 70% in this particular associate company, 30% is owned by Paras. Idea being the program management and the control of IP will be handled by the JV company, where the manufacturing of all of this will be handled by Paras.
Got it.
All right, we'll leave it there. Good luck and thank you very much for joining us here on CNBC TV18 this morning. Thank you very much for being here.